Hey everyone, in this video we're going to be describing a quick, simple, easy, high probability trade setup, and we have labeled it the back burner trade setup, and hopefully it helps you profit. So first off, what is this trade setup? To put it simply, it's the first 5-minute or first hourly oversold conditions after a significant bull run. And essentially the psychology of what's going on, you have a name that's been running very strong. You have bulls on the sidelines that have not been able to get in because it's overextended and they don't want to chase. So they look to buy on the first consolidation pullback, and those oversold conditions generally get high probability. Anti-FOMO, how does it get its name? So why is it a back burner trade setup? When I'm looking at a name that is running really hard and I clearly have missed the best opportunity to get in as a bull and I'm no longer comfortable with the risk to reward of a bull entry, I just say to myself, okay, I will patiently wait for the back burner trade setup. It may not happen today, it may not happen for a few days, but I know that the next time this ticker hits oversold conditions on this time frame, I am interested in a trade. And that keeps me from making a FOMO bad entry and keeps me patient. I first noticed this trade setup in cryptocurrencies. I had some friends that knew nothing about trading. They were in the crypto space, and I wanted to give them something that was very simple because they were trying to trade, and I knew that they weren't going to put in the time and dedication that they needed to actually know what they were doing. So I just looked at Bitcoin and said, when this little line drops under the number 30, referring to the RSI on the 5-minute time frame, buy. And during that massive hype run in 2017, if you bought Bitcoin on 5-minute oversold conditions, your probability of a great entry was extremely high, and it was pretty much trading 101 for dummies. So when you're in a name that's ideally in blue sky, that's when we look for this trade setup to have its highest probabilities. I then applied this to stocks after using it in crypto years ago, and I have been very, very pleased with the probability, how high of a probability trade this is in terms of the frequency that you do get noticeable significant bounces from these levels when these conditions line up. So there's many different ways that this trade can show up, many different details on individual names with how this trade setup is forming. But if we want to have a checklist of what are the most ideal conditions with the highest probability, and if I want to be extremely picky, I wait for all of these check marks to be able to be ticked off. And it's important to note that if you don't like trading oversold bounces, this trade setup is not going to be for you. If you want to work on your oversold bounces, this is the kind of trade setup that you should paper trade, observe, and get a lot more experience with to hopefully then apply it in the future. But the checklist of the ideal conditions are: number 1, no news, no earnings, nothing fundamental as for the reason for the pullback. It just should be a pullback because the bulls were overextended. It's time to consolidate, and nothing else aside from that. Number 2, we need high liquidity. We need hundreds of millions of dollars traded, and I'm talking about names like Tesla or OSTK, a lot of volume and liquidity, because names that don't have that volume and liquidity and have wider bid and ask spreads can see RSI levels get more overextended than those names that are high liquidity trading. Number 3, it keeps the longer term uptrend intact. What I mean by that is, if I'm looking for the first 5-minute oversold conditions from all-time highs, I want to see it looking for an hourly higher low as well. So generally, we'll look for the first 5-minute oversold conditions to try and set our hourly higher low. Same thing, if I'm looking for my first hourly oversold conditions, I want to be looking for a daily higher low to maintain the daily uptrend. Number 4, I want the shorter term time frames in a waterfall. What does that mean? It means I want the bears as extended as possible. I don't want to see little bear flags on the way down cooling things off. If I'm looking for first 5-minute oversold conditions, I want to see a fast hard drop. I want to see the 2-minute time frame with that fast hard drop as well, because the more overextended the bears are, the more likely a V-shape like recovery is going to be the result of that oversold bounce. And that V-shaped recovery is important because that allows us to maneuver partial positioning, which we'll go over in just a bit, and that allows us to get in a very comfortable position to be in control of the trade. And number 5, you want to have historical examples. Look back on the ticker. Say, okay, last time we had a significant bull run, how did first 5-minute oversold conditions react? And if we see, yep, played out, nice bounce, that gives us more confidence that this time it's going to happen again as well. So now we're going to look at entering and exiting for this strategy. As with any trade, we need a game plan. We need to know what we're going to be looking for scaling in. We need to know what our targets are going to be, and we need to know what our stop loss is going to be. In this trade, I generally only use RSI for my entries. In other trades, whether it's bottom fishing or other oversold bounces, I like to have a support level nearby that I can be trading off of, that I can put a clear stop loss below. In this instance, we generally don't have that, so it takes a little bit more guts in terms of just entering based on one indicator, which is RSI. And in this example, let's just give a rough trade setup and something that I would do. So let's say we just hit all-time highs in Tesla and we're hitting our first 5-minute oversold conditions. My style of trading for this back burner trade will be to make one entry when the 5-minute RSI breaks 30, and it will be to save a second entry if the RSI gets down to 20. Now, if we only go down to 27, I get my one fill and then the bounce starts and I'm positioned fairly well. If we drop all the way down and things start to get extreme, I'll get my second fill, I'll have a better average, and at that point, if we keep dropping, I have to set my stop loss based on a dollar amount of risk that I'm willing to take on for the trade, because again, the last thing we want to be doing is entering a trade and it's just in free fall. And next thing you know, you don't have a stop loss and you're in a heavy red position. And this could be the kind of scenario where we go through our checklist and maybe we don't know about news. Maybe news did come out and we missed it. And the last thing we want to be doing is scaling in to a first oversold bounce trade back burner and not know that news just came out. So again, stop loss is always required. And if I only fill one position, I don't worry about a stop loss. If I fill both positions, then I drop down and put my stop loss in. My style of trading for exiting, first off, do you want to lock it in? Do you want to just take your bounce and exit your full position and call it a day maker? And that's that. Do you want to let it ride? Do you want to try and make that 5-minute oversold entry knowing that we're just looking for an hourly high or low, and then try and ride that uptrend for further gains, even potentially entering it for a swing position? So my strategy would be to take half. If I fill both of my orders and I'm now a bit overexposed, just in the sense that I have no more ammo, I have no more bullets that I can fire because I'm not going to enter any more positions, maybe when we get back to my break even, I quickly exit half, and that allows me to keep half of my capital in case we do see things get extreme. And again, that just keeps me in the driver's seat of the trade. I could also, if I only get one fill and then the bounce starts, I can look to exit half of my position. And I do this a lot, where I will exit half of my position that allows for me to put a stop loss under the low of the drop, which will be essentially a small win, break even, or a tiny loss if I were to stop out. And then I try and let the trade play out longer. So if it's first 5-minute oversold conditions, I make my entry, I exit half, $1 higher than where I entered. I put my stop under the low of the dump to that point. If we cool off the 5-minute RSI and then drop to a lower low, I'm protected and it's risk-free and I don't have anything to worry about. But if the bounce gets follow through and that is just an hourly high or low, and then the bulls control a 5-minute uptrend for the next 2 or 3 hours, I want to leave a bit of a position to run with that potential momentum. So that is my style. Take half fairly quickly, put a stop that allows me a zero risk trade, and then let the other half play out a little bit longer. Let's now look at some examples. So this is OSTK on the 5-minute time frame, and there's a couple things to note. Number one, what about other time frames? It's possible that we see bounces on other time frames. All I'm doing is giving what I have observed for the highest probability. 5-minute and hourly oversold on stocks, and certainly first 4-hour time frame oversold in cryptocurrency has proven itself, when in a daily uptrend and after a strong bull move, to have high probability as well. That's as far as I'm going to go. Again, yes, other time frames will bounce as well, but that's up to you to observe and determine if you want to play those other time frames. All I'm doing is conveying the information of what I have personally focused on and observed. What if first 5-minute oversold happens in extended hours? I am much less likely to care if it happens in extended hours. I'll probably just skip it over and say, well, we used up that bounce and I'm no longer interested. And that's because there is less dollar volume. Again, you can still look to play it, but it wouldn't be in the ideal scenario conditions. We wouldn't be able to check off that checklist because first 5-minute oversold in extended hours is not going to be ideal conditions. So again, if you want to be trading this style more often, you can look to those plays. But if you want to be as picky as possible and have the odds as in favor for you as possible, you're going to wait for that checklist to all be checked off. So here on OSTK, we had an all-time high, a big drop, but it wasn't 5-minute oversold conditions. And you have to remember that I use RSI at the close of candles. For this video, I've changed it to the low because obviously if we drop down and the 5-minute RSI breaks under 30 and then the candle has a big long lower wick and then that RSI goes back over 30, if I'm using close where the RSI is determined based on the candle closes, it will show me that we never hit 5-minute oversold. So we have to keep in mind that at the bottom of the candles, it's possible to hit oversold conditions, but by the time the candle closes, we don't have those oversold conditions anymore. So for this video, I'm just using the low RSI so we can see what was the maximum lowest RSI that was hit on these candles. So I can see for OSTK, we hit the all-time high on August 19th, 128.50. And at the end of the day, we hit first 5-minute oversold conditions. That RSI dropped down to 26. So if I'm using my strategy of first 5-minute entry under 30 and maybe another one for the low 20s, I would have one of two orders fill on this drop. For me personally, timing is important as well because this is happening at the end of the day. I'm going to lock in my profit if I don't want to swing trade the position. Because I know if this bounce is going to get followed through and just set an hourly high or low and look for hours of upside, I will have to hold it for a swing position. So that's important. In this instance, we went 119.44 and then 15 minutes later, we're up at 122.17. So a very quick 2% bounce. And then that move into the next day saw follow through of 4% of upside. So just as a rough example, I would probably just lock in a little day maker, a little 1% trade on this bounce, knowing that it's the end of the day, knowing that I don't want to swing trade it, and just quick and easy, scale in, one position out of two fills, exit that one position for a 1% gain. So then it happened again. We double topped at the all-time high. We dropped down the next morning to 119.10. First 5-minute, or it's not the first 5-minute oversold conditions anymore, but again, we're seeing some solid bounces, another 2% bounce from those oversold conditions. Now let's look at an hourly oversold conditions example. So this is an example of GRWG, and we're going to be looking at the big, massive run-up to all-time highs, and then the pullback. And we were on our second day of consolidation, which means we're looking for a daily higher low to form. We're still easily in a daily uptrend, and we're watching for first hourly oversold conditions. So zooming in, and again, right now I've got my RSI turned on to show me what the RSI was at the low of those candles. Generally, when I'm trading, I'm using it at the close of the candles to keep an eye on it. But again, this is for the video example. And we can see that the first hourly oversold conditions were hit the second day of consolidation in the morning. That RSI dropped down to a low of 25. So again, if I enter my first scale in when 30 RSI breaks, I would get an entry filled in the $16 range. And then I could save another entry in case we get extreme, maybe down in case $15 breaks. And obviously it didn't. The RSI only got down to 25. It also depends if I want to be aggressive or conservative. If I want to be an aggressive trader, maybe my RSI goes at an entry at 30 and then a second entry at 25. Maybe I tighten that up and enter my second entry sooner if I want to be aggressive. Of course, if I'm being an aggressive, that means I have more risk and also more reward on the trade. So you can tweak that around based on you personally or based on the individual name if you're looking for an entry and you're looking to hold it longer term. So we ended up hitting that hourly oversold RSI. What was the 5-minute doing at that point in time? It was a waterfall, which is exactly what I want to see. It was a straight drop from the high of the day, and we then dropped down over the next 40 minutes, a double-digit percentage drop. That's a waterfall. Just free fall, get as extended as possible. We hit a low of the day. We bounced a bit. We went from 1562 to 1620, so that's a nice little 3.5% bounce. We hit a new low of the day by under 0.5%, right around 0.5%, and then that was our bounce that got follow through. So if I'm looking at the play based on the hourly, that's going to make me a little bit more patient than it would be if I'm looking at the 5-minute time frame. So again, maybe I make my first entry on the break of 16, so I'm in the 1590s, and psychological levels are another thing I'll use. I want to see a psychological level break to see the last little flush climax. So a break of 16, I make my entry. I put a stop. Actually, I don't have a stop loss set because I'm willing to make a second entry down at hourly 20 RSI, down at around 15 or so. So I have my entry. We see this little bit of a bounce. I'm still not doing anything because, again, 5-minute RSI cooling off doesn't mean much to me. It would be the hourly RSI cooling off that I would care about. And then we see our significant bounce. Once the 5-minute trend change is confirmed, maybe I exit half of my position and say, okay, now the hourly RSI is cooling off. This is our oversold bounce playing out. And now I'm no longer looking to enter my second position because this is the bounce. So I pull my bid for my order down at $15 and I sell half of my position for, let's call it a 50-cent gain. Now, my break even with an entry at 16 and selling half for $16.50, my break even is $15.50. If I put my stop under the low of the day, I have zero risk and I can let that trade play out further. And in the end, we ended up going to $17.60 that day and saw some nice follow through. So that would have been a 10% win from an entry at 16 all the way up to $17.60. Again, once I sell half, it's no longer a 10% win on that position because obviously I have less shares, but you get the idea. You could choose to hold the whole position. You could choose to just lock in the whole trade once you get a few percent. It all depends on you as the individual as far as how you look to let it play out. Again, if it's a name that is in a very strong daily uptrend and you want to hold on to a swing trade entry, you're looking for that first hourly oversold condition and you're trying to establish yourself in a position that you can comfortably swing trade from there to try and keep that daily uptrend alive and ideally make a nice entry on that daily high or low. We can also look for this trade to be a thing on first daily oversold conditions when we're looking for a weekly high or low. That just happens way less frequently, but it is still a trade to be watching. So this is something you want to be playing around with now. Observe. If this is a new concept to you, observe and paper trade it until you get comfortable and then can utilize it with real money. Feel free to ask any questions. Be happy to answer them. Have a good day.